Trading Market Technicals morning call video for Monday, July the 1st. Well, we did get that anticipated dead cat bounce that we were looking for, and to me, I'm going to definitely label it as a dead cat bounce. Markets were very quiet, and I'll show that to you in a moment in the charts and what we're looking for in our indicators. But the markets really did bounce on low volume, nothing really to write home about for the bulls anyway. The markets are at an inflection point, so the market's going to need to do, if we're going to resume its uptrend, it's going to really need to take out its 50-day moving average, where most of the key sectors are just below that. So we're going to look for that this week. Speaking of this week, as we all know that there is a holiday, July 4th holiday on Thursday. Markets will close half a day on Wednesday and are open all day on Friday. That being said, you're going to have really 2 full days of trading. Wednesday is going to be a half a day, which most of the big tier traders and money managers are going to be gone really this week. And then Friday is going to really be a non-event. Aside from the non-farm payroll reaction, probably you'll get an hour or 2 of good trading, and then that's pretty much it for that Friday. So just keep that in mind, guys. I would be reducing exposure today, this week, and wait for next week. Now, we do look for markets do tend to reverse itself during these holiday weeks. So, look for a possible weakness going into this week. Now, the futures are up because of their reaction to, we had some good numbers come out, some econ numbers come out of China and Japan, and markets are reacting to that. Yen is actually weaker, where the Nikkei is actually higher, so that's putting risk on sentiment this morning. So we'll see how the markets react early morning. Right now, futures are up about 8 handles. Okay, let's go right into the econ data. We have ISM, which is going to be highly anticipated and looked at this morning at 10 o'clock a.m. Eastern Time. We also have on Monday May construction spending at 10 o'clock, and then on Tuesday we're going to have May factory orders. Wednesday, we're going to have June ADP and U.S. trade deficit. And then on Wednesday as well, we'll have the June ISM services released at 10 o'clock. Now, of course, the non-farm payrolls are going to be 8:30 on Friday. So the 2 key economic data is going to be non-farm payrolls on Friday and, of course, the ISM number this morning at 10 o'clock. So let's make sure we're prepared for that and keep an eye on what's happening. Now, let's go right into the indicators. Now, I think that the markets are in a spot. Now, they did unwind a lot of that overbought reading, which is great, right? We don't want to be looking to short at those levels where you're at support. We want to short on any rally. So, to me, I think there's going to be 1 or 2 things, and I'm going to point that out in a moment. But we really need to see where this market goes this week. Now, this week might not be a time to look to get short because you're going to have a lighter than expected volume. Markets usually tend to just grind higher. So we could have another week of gains before the markets actually start to roll over. Or the markets could be done for that 4 or 5 day rally, and then they start to roll over. Only time will tell, and price is the only key driver here that's going to give us a shot. Now, we are basically in neutral territory again from being oversold down to this 80, 90, 70 area, which is nice because now we're looking for a reversal in the McClellan oscillator. So we'll just keep an eye on that. Let's take a look at the bullish percent SPX, and as you can see here, we're way off of any type of bullish buy signal here in the bullish percent S&P. So again, weak bounce from off the lows here of 1559 in the S&P. Take a look at the NASI weekly. This is still on a sell signal, trying to break higher here. So this week will tell. Remember, this is a weekly chart, so we start a new week here, but this has been on a sell signal for the last 5 weeks. And like I keep mentioning to you, this is a great indicator if you are an indexer looking to short and buy the market, at least the index itself. This is reliable. It does give you a little chop every once in a while, but definitely a reliable indicator. Here's the NASI, the New York Stock Exchange Summation Index on the weekly. Let me show you the NASDAQ on the weekly chart as well. This here still has more room to go. As you can see, hasn't even curled up yet. And this is the NASDAQ Summation Index. Okay, so that's still on a sell signal as well. And let's take a look at, which I haven't showed you in a while, is the NASDAQ Record High Percent Index. We got that double bottom, like I mentioned. I like to see this, and that gives a little bit of a buy signal. We actually had a lower low from here, and then we rallied up higher. So now we're back into this 95 percentile here. unwounded a lot of the oversold readings. So now let's take a look, and we're going to just take it one step at a time. But if you look at, here's the tick. We are staying below zero, which tells me internals are weak on this move up. So to me, I'm going to favor looking at short rallies here, obviously on weak stocks. And take a look at the VIX. VIX actually came back in again from the Bollinger Band, and I mentioned this here. We have a black candle reversal. Now we have a black candle again. And if the VIX starts to gain momentum, and we really start to continue to stay above 21, 23, I think the markets may be in trouble, which I think I think the correction is not over, to say the least. I think we're going to be looking for somewhere from an 8 or 10% correction, pretty much July, right after the holiday. I think the markets will probably resume its downtrend a little bit, where a lot of longer-term investors will start taking some profits, because it makes a lot of sense if the Fed is going to pull back its asset purchase program, at least to even to talk it down. There's no reason to ride a lot of these gains into some losses. So I think they take profits, and then we get some sort of a rally going into the fourth quarter. Okay, so let's take a look at the dollar. Speaking of that, where do you put your money? The almighty buck. And if up 8 days in a row, yes, it is a little bit overbought, as you can see here, but I think any pullbacks in the dollar should be bought, and or would establish some sort of a longer-term position if you are looking to put money to work. I think the U.S. dollar is a great way to play it. But any pullback into this area here, we have the 8 to 20 and the 50 would be a buy zone area for the dollar. Okay, and that's going to put pressure on commodities as the dollar continues to move higher. Speaking of commodities, let's take a look at gold. And gold here, gold is up this morning nicely. But I had mentioned, I had a couple of emails, few emails actually. What do you think we should look to buy gold? And I had mentioned anywhere between this 1150. I think it was early last week or the week before. I think gold will test this area, and even maybe even go lower. So any rallies would be a good short to short gold. But I think if you want to look to really buy gold, anywhere from 1,000 to 1150 would be a good buy zone area. And obviously, you would have to break of 1,000 would actually be your stop. Okay, now it's obviously a huge, if you're looking to play the future, but you could play the stock GLD. That would give you just as good exposure as you are playing gold futures itself. Okay, let's take a look at crude oil. I continue to love this trade. This is a great trade. Inverted head and shoulders, large symmetrical triangle. We have a neckline coming in right here. We're right at it now. Any dips in gold, I would be buying just in this 50 and the 200. Your stop could be below here or below the symmetrical triangle, below 88. But I do continue to like this gold, crude oil trade. Excuse me. So, and I think with the Syrian issue, conflict, Lebanon, you got Egypt going on now. All it takes is one event, and this thing is going to explode at least to the 105, 106 area, and that's going to be first target that we will look to take. But I continue to love the gold. The crude oil trade. Okay, now let's take a look at the euro real quick. I just want to show you we continue to have this large head and shoulders pattern. Again, it only is valid when it triggers the neckline, which is going to come in right around 128. We still got about two big figures to go, but again, it's starting to break down. As you can see here, the 50 is going to cross the 200, which would be the death cross, and then of course the 8 and 20 will follow. So again, euro looking really weak. Why? We have the dollar gaining some strength. So if you want to play this, or you want to play the dollar strength, you could actually short the euro dollar itself for that move in the dollar to move higher. Okay, so let's take a look at going to the charts here. Long-term picture is still positive, right? We're still holding above these longer-term uptrend lines here, and of course here. So we're still looking okay. Now we did break down below the this upper channel here. However, we are now back testing it, but the longer term picture is still okay. There's nothing wrong with the long term picture, and now we're unwinding this overbought reading, which is actually healthy for the markets here. And this is the weekly chart of the cash. Now we have the daily chart here, and as you can see here, we're back testing this move higher. Our indicator, our CCI indicator, is actually making lower lows and lower highs, telling me this is just a weak bounce here. And if you go into the spiders, you can see here on the monthly chart, again, long-term picture, we're hanging above this area, 158.50. That's an area that's going to need to hold this month. If we break back below and close it and take out this low here, 155.72, then I think you're going to have a bigger shot to test at least the 8 or the 20, but I don't. That's going to take a little time. Obviously, this is a monthly chart, so at least the 150-ish area if it does take out the low 155 on a monthly chart. Okay, weekly chart again, still holding this uptrend line here as you can see, but we did break below it. Now we are above the 20 on the weekly, which is fine, and again, still constructive here. No problems at all on this. On the weekly chart, still looking quite healthy. We did get a little bit of volume. Now we're looking across here on the MACD, which would give a sell signal here on a weekly chart as well. Stochastics already gave a sell signal, so this is just to me a back test, and this is why I'm more of an advocate to look to sell any rallies here in spiders. And we had here, just to show you Fibonacci retracement, we are now at just about, we didn't even get to the 50% Fibonacci retracement. We're actually now back to the 23% retracement. So I think any rallies this week, and that's what I'm hoping for, we get a rally this week, a little dead cat bounce, little holiday rally, and right underneath the 50, as you can see here, and this downtrend line, the upper downtrend line, would give us around a 38% retracement, hopefully even the 50% that we can actually sell the market. And take a look at the 30-minute chart. As you can see here from this trend line, we have back from 522, and that was the peak, that was the high, and now we're just actually rolling over below this downtrend line. Okay, and this is just not looking too pretty. That's why I say that bounce should be shorted, no question about it. Diamonds here below the 50-day moving average, again below this long-term trend line from November, and actually the Dow actually was the weakest of the 5. And let's take a look at the transport. The transports here, again, our leader, not looking too pretty. We are way below the 50, we're below the 20, and we're below the 8. The next step would be the 200-day moving average. If it does get there, at least it would be around that area. I'm looking at a 101.5. By the time this does get down here, probably 101.5, 102 area would be the big target. But this is probably the low, which would need to be tested first before it breaks lower. Okay, transport's very, very weak, not looking pretty here. So this tells me that I think there's some further downside. Excuse me. Russell, good gauge of risk, same thing, below the 20. Now the Russell is actually the strongest of the 5 that we follow. It is above the 50-day moving average, so that's a good positive for the bulls here. But I think the Russell really needs to get back above this downtrend channel and really start to take over and be a leader. It is one of the leaders, and maybe pull some of these indexes up. That is what I would like to happen if I were a big bull in the market. But again, it's healthy to for the markets to actually retrace a little bit and unwind its overbought reading. Here's Goldman Sachs. Just want to show you what the banks are doing, clinging to this area, this horizontal support area. Right now, Goldman doesn't look too good. We have some bearish symmetry. We're below the 8 to 20, and of course the 50. 200-day moving average would be the next real stop here once it takes out this low of 148.50. Take a look at the XLF. Same thing here with the XLF. Not a real pretty picture, but it is above the 50-day moving average. So this sector, the banking sector, is definitely stronger than a lot of the other sectors that I reviewed over the weekend. So if the markets do continue its move higher, you want to be looking to buy a couple of good, strong, healthy banks because, again, rising yields is good for the banks. And, of course, let's take a look at Apple. Now, I put this back in, I think it was October, when I think Apple was trading at somewhere around 550, 600, and I said, watch this level here if it broke. Now, this area here is the 200-day. That's where the 200-day was when I put this, and back I think it was in December, and that's at 346. Now it's holding this 200-day moving average, so I'm just going to move this right here, and if it does break that area, and that's going to be, let's call it the low of 380, and I'll change it 350 to 380. If it does break below that, then I think you're going to see that area here be tested, and that's a 350 area here. And then, of course, ultimately would be 275, which I think we're way, way, way below that. I don't even think that's going to happen at the moment. But remember, I had mentioned, guys, it's really a trading stock. This stock has nothing good coming out of it at all until the end of the summer. And as you can see here, it needs to hold this area here. Otherwise, this market, this stock is going to actually crumble. And it does. There's nothing good about this stock, guys. I would not be looking to buy. I still would actually, and I had mentioned, look, in the maybe to mid to high threes, and then we would look to reevaluate when it got there. So now I'm evaluating it, and I would say if you're really, really if you're really a longer term player, I would be looking for Apple not to break a little bit lower. So I wouldn't be stepping in front of a freight train right here. But if you're really long term and you want to nibble ever so slightly, I think that wouldn't be a big deal. But remember, if we break this area, Apple can actually get down to 3.5. And that's really a better spot, 350, 360, 365-ish area. I would be looking to dabble it. Don't forget, you're still around 400. So Apple really needs to get going to the upside before otherwise, actually, Apple needs to get going to the upside. Otherwise, I think this thing starts to break down even more. And again, they just have they have some issues. Samsung's coming out, taking market share away from them. So I don't know. It's just something that I wouldn't be looking to be buying. And of course, the Qs is going to actually help out. Apple's helping the Qs with some downside pressure here. So take a look at this. As you can see here, look at these candles. Really small little doji candles all the way up. Nothing big. I don't see any engulfing candles here, which tells me that technology is also weak, along with Apple. And I think that this market itself will be sold into. But again, we're in this conflection point here in the market that the market needs to break above the 50 and really start to reverse and move higher. Otherwise, I see a breakdown here in the markets. All right, guys, remember, it's the holiday. Use caution. Take a step. Keep it light this week. Make a little bit of money. Go home and enjoy the holiday weekend. We'll speak to you tomorrow. Have a great day, everybody.